Appreciate the shush. That was good. We've got a great panel. Stablecoins, hot topic, and three people who clearly are experts in this space and really likely to bring us some valuable perspective. Why don't we just kick it off and give very, very quick introductions. I think most people know probably of your three firms. So just tell us a little bit about yourself and who you come from. Nitin, you can start.
Oh, thank you. So Nitin, been here again. Thanks for the event. Ex-IBM. Founded the blockchain labs at IBM. Past 2 years, I've been working with State Street, which many of you may or may not know. It's one of the largest financial institutions in the world. Heads down on digital asset and infrastructure that's needed for large financial institutions to consume digital assets and stablecoins. So happy to share some of that perspectives here.
Great. Danny?
Hi, I'm Danny O'Brien. I'm from the Filecoin Foundation, and my background is actually, I used to go to the cypherpunks meetings in San Francisco. I must have been about 6. Since then, I've worked at the Electronic Frontier Foundation, sort of trying to guard that line between how regulation can sometimes help technologies, sometimes destroy them in their cradle. I've been watching and participating in some of the regulatory discussions around the world. I'm not a stable coin guru, but just because of the nature of Filecoin, we do spend a lot of time thinking about how digital assets are being classified, because it's the very nature of regulation to try and chop and partition and work out what these things are. So.
Great. And yeah.
Hi, Yam Ki Chan, Vice President for Strategy and Policy at Circle. And I want to thank the Mooch for giving a shout out. You can come and thank us for getting Larry Fink on board and providing the gateway drug to Real Crypto. I work with our team on market entry strategies, as well as conversations with governments all around the world. I'm based in Singapore, and I kind of work on the intersection of, my background's on the intersection of finance, technology, and international policy. Prior to Circle, I was with Google for some time. That's actually where I met Yat back in the day in Hong Kong. And then before that, at the White House and National Security Council and Treasury in the US.
Okay, great. So, and I'm Michael Casey. I'm the Chief Content Officer at CoinDesk. Hopefully all of you are readers and know what that publication is. And we also... Never heard of us? Okay, we're a little company. We won a Loeb Award last year, by the way, guys. I like saying that to everyone. And that is the Pulitzer of business journalism. Just want to say it. Okay, enough about us. How about me? No, what I think is interesting here is that we've got really quite different perspectives, right? So there's a bank, there's a non-bank, and then, as you said, Danny, there's this perspective from the side. There's a cypherpunk perspective, exactly. And I also think there's another one, is just there's a US perspective, and then you're based in Singapore, right? So we can sort of look at this from geographical perspectives, and that clearly, if we're going to look at regulation, that seems to be the theme of the moment, like whether the US, Singapore is probably leading in many respects on stablecoin regs, and of course MiCA is coming in Europe. So maybe the best thing to do is to have each of you guys give a perspective on the outlook for stablecoin regulation, if you can, from the US perspective, and then the Singapore one. And then I want to throw to you, Danny, to sort of talk about some of the conceptual aspects of what this classification problem you're alluding to is all about. So over to you, Nitin.
Yeah, absolutely. So part of my work is looking into technology design as to what we need to do to be able to deal with settlement systems and the duality of transaction that happens when you tokenize fiat, which is the ultimate sort of payment instruments that's used for settlement. So we have to coexist with existing financial systems. And part of that conversation is what happens when you speed up the movement of money, because tokenization does that, in context of Treasury, not just the US Treasury in general, but also Treasury of financial institution. Second thing I think we look into is instrument itself, because stablecoin, depending on how you classify it, what instrument it represents, it could have balance sheet implications. Bunch of regulation in the US prohibits us from doing that now, which I think has been questioned. SAB 121 happens to be one of them, and there's a blanket statement that if you tokenize any asset, you have to keep an equal amount of that as on your balance sheets, without actually understanding that not all assets are the same, which means that if you're creating a stable coin based on some level of allocation of funds that happens to your balance sheet, it is actually an asset-backed sort of token. And there's always this comparison of stablecoin in the US context, or USD stablecoin, for example, with something what Luna and Terra did, which was completely not comparable at all. So there's a whole kind of FUD that has been, and so a part of my job is to be able to describe a few things. We look into what infrastructure that's needed, which can compete, but at the same time coexist with existing payment rails, which is a really, really important topic, because The current financial market's $480 trillion. A lot of commodities and a lot of sort of settlement happens in USD in our ecosystem per se. Second, so that's the infrastructure piece. Second thing is instrument. Instrument meaning a stablecoin has different sort of definitions. How do we define those? So this education is really, really important. I've been doing this for 2 years now. Every month, you go to Treasury and SEC and help them explain to how these things are evolving and impact on existing financial system. I'll pause at that, Michael, and love to get your perspective.
Well, I mean, but just before you like just maybe just a quick projection, if you can, on when we will get some sort of regulatory framework. Because we've got the House bill that is there. That's the one that's got the most attention. Obviously, entering into a difficult year. I mean, what's the outlook?
Yeah, there were totally about 43 at my last count. 43 overall digital asset bills in the House. The Stable Act or Stablecoin, which is so it's interesting because last consensus at the event that CoinDesk sort of hosts, I think Senator Gillibrand did mention that we will get this passed that year. That never happened. I did meet them at the North American Blockchain Council in Fort Worth last month, and the expectation is again the elections are upon us. So second, third quarter is an expectation. Realistically, I would imagine that 2025 is much more realistic, only because we are dysfunctional in many ways as to how we pass bills and how we pass laws, I think, in terms of time.
And then there's a little thing called an election underway as well.
Right. It comes to the way.
Yeah.
Well, I would say that we are at really an inflection point. This is an inflection year for stablecoins overall. The U.S. has passed at the House Financial Services Committee a bill. The main sponsor of that bill is retiring. So there's a question of what will happen, but there is a window to do it. But if you were to look at a spectrum of stablecoin regulation, the US is furthest behind, and leading the pack, I would say, is actually Asia. And if you were to look at Singapore, Japan, Hong Kong, those are probably at the front of the pack. Singapore already has rules in place under the DPT framework, the Digital Payment Token Services, that allow stablecoin. They then upped it a little bit and did an upgrade with a single currency stablecoin framework, which I can talk a little bit about, that defines stablecoins more specifically and treatments of that. In Japan, they have a stablecoin regulation in place for domestic and foreign issue stablecoins. And then in Hong Kong, they issued the stablecoin framework 2 days after Christmas, which I think shocked some folks in terms of timing. But what people I think kind of missed about the Hong Kong release was actually the chief executive of the central bank published an insights note. And that is actually a policy statement of how they're thinking about the evolution of money in Hong Kong and the evolution of Hong Kong's currency system from pre-1930s all the way to today. And he actually drew a line. He drew a line from the way paper money was created, tokenizing silver, to stablecoins today. So I think Asia is where some of the forward-thinking movement is, and of course you have MiCA, which has passed.
That's fascinating because I mean Hong Kong is the ultimate currency peg story. So what were the main takeaways from those insights, or the one, if you want, just to be quick?
Well, I think the quick thing is that when you scan most of these regulations, there's actually tying back to what Nitin is saying. Not all stablecoins are created equal. And the regulators are actually finding consensus on what makes a good stablecoin, referencing that's pegging a currency, how reserves are done, attestations, redemption, all of that stuff. Those are actually all in agreement. What we need in that next phase is actually harmonization and regulatory interoperability. The same way that we have interoperability on-chain and between chains, we need it for regulation. Else, we end up in a spot where we recreate these siloed, wall gardens of stablecoins or digital asset financial systems because of the wall gardens in the regulatory space.
And then you were going to just give a few words on MiCA. But before I do, you were about to say MiCA. Okay.
Well, I think MiCA, it's a work in progress. I think generally, and no offense to my European colleagues all around the room, Europe is, it's sort of slow, but then when it hits, it's like high impact. Right, GDPR took like a decade to write, but when it was written, it kind of set the international standard. MiCA took a really long time to write, and now we're in that phase 2, level 2 writing that will come in June this year. And then there are various other things that has to happen. So I think MiCA was a good framework. and it kind of sort of made the legal structure possible. But there's still a lot of work to be done, and we look forward to working with the various regulators, both at the national level and also at the supranational level, to make that happen.
Great. Okay, Danny, it seems as if the very point you were talking about there, classifications, harmonization of language and so forth, is going to be really relevant here. Before I bring you in, I just want to point out this morning, I was actually at the Filecoin Sanctuary, and we held a roundtable discussion. Yeah, you were there, and we asked some questions about AI in particular, and open source technology, and the degree to which blockchain can be valuable in that problem, and then move that into a policy conversation. And one of the big takeaways was like, please don't regulate open source. Try to sort of fit. But yet there was also this concern about being able to identify the intermediaries. Who are the guys? So
it's the act of naming a thing, right? And I think one of the things that's really interested with the stablecoins progression of regulation, in many ways, it's far more advanced than a lot of the other parts of cryptocurrency and cryptocurrency regulation. And I think that's one of the reasons for that is because, so much of what we do is, we're constantly having to invent names for things, right? And sometimes we invent terrible names for things, but they succeed anyway. And the reason why they succeed in the public world is because suddenly it clarifies something and puts something into focus. NFT is a terrible name for an incredibly popular artifact, right? But it crystallized something that people can understand, right? And they don't understand, oh yeah, of course, that's non-fungible. They get it. And I think what we saw with stablecoins is the same thing in a potentially negative way if it wasn't for so many people working to stop the train that was going down the line. I think I was probably at EFF, which is sort of defending the internet kind of organization, if you haven't heard of it. And I remember absolutely the moment where the dark eye of Sauron turned on cryptocurrency globally, and it was Facebook's Libra, right? Or what it was called. The moment that Libra was described, every politician went, wait, Facebook has a currency? And like it's going to be pegged to our currency? Tell me more about this stablecoin and how we can stop it, right? Because it was recognizably a thing by a recognizable figure. And I think I'm just trying to extrapolate here for the lessons that we can learn, because in many ways the stablecoin story is doing so well because there's been this sort of explanation and there's been these moves to create something for it. And I think the points we see are the points where politicians are like staring, like, when you were a kid and you were staring, trying to see something in the water at the bottom of the microscope, and then suddenly it crystallizes and they see it. And as soon as they see it, they want to regulate it in the same way as the thing that it looks like to them. And it happened with stable coins, and I think it's going to happen with a lot of other digital assets. And you just have to anticipate that moment and catch it before it happens.
So, it strikes me as well, because again, bank and non-bank, there is that tension as well, certainly in the way that I've seen it emerge in the US, the discussion about regulation. Like, should stablecoins be purely the domain of a bank, and therefore, do you need to have a bank charter to issue one? And no, so maybe just break that down a little bit, because I think it also gets to some of what Danny's talking about. It's like, regulators, certainly financial regulators or currency regulators, think through the banking system as their way of thinking through this, right?
So one thing which I think is a pertinent point, I begin to use the term digital fiat. It's a simpler term. People understand it's fiat, which has implications. The fact that if a token represents fiat, it has the same rules and regulation around how money moves today. So two things that I think the regulatory college of regulators or regulatory apparatus around the world are considered around this stablecoin is, one is around using payment as a payment system. So this is infrastructure that we need. And do we need to impose all the PFMI, which is the principles for money laundering and everything else? Second thing, which I think is money supply, which is a central bank issue to say, if we introduce stablecoin, are we able to then still have the notion of money supply that's in the system still governed by the central bank, only because these are issued by regulated financial institutions? So these are two of our primary elements. One is the implication of yet another payment infrastructure, and now you have multiple payment infrastructure dealing with velocity of money, which is different in different payment systems. Second thing is, does this have an implication on, I would say, money supply, which is a huge concern for all central banks around the world. Third thing is counterterrorism financing, which has become a really, really important issue, especially with India demonetization happening. So that's a massive India and China conversation that is now also a US conversation, thanks to our Congressman Warren, I guess, or Senator Warren, for example. So those are the few sort of landscape conversations we've had so far. I'd love to get your perspective as well.
Circle's take on this.
Well, first of all, I don't think we compete with banks. Banks are our partners. So let me talk about how that is, right? First and foremost, we are essentially tokenized cash, at least the way the Circle runs USDC. We take fiat, we issue a token, the fiat goes into either 10% in, roughly 10% in deposits at a bank, or the remaining in a BlackRock managed fund that is SEC registered that holds treasuries and reverse repos, right? And all of this is custody at Bank of New York Mellon.
That's right.
Right, so that's one way we work with them. The second way we work with banks is that because we are the digital dollar, at some point you have to come back to an analog dollar. And over time, that changes in terms of how much time you spend as a digital version and how much time you spend as an analog version. At the moment, it's more analog than digital, and over time it's going to change. But in all of our customers, the large institutions, the exchanges, et cetera, they need to get money back into fiat. So we work with banks all around the world to make sure there is an on and off ramp for all of our customers, no matter where they are, 24/7. That's our goal. Second, we work with them. And then the third way is that we actually partner with a lot of the banks to help them also think about the digital asset strategy. And most of these banks play so many different functions, right? Like, what is a bank? You have banks that provides a credit and leverage, all of that. You also have a bank that is an investment banking, and you have a bank that does wealth management that want to offer services, and they want to do investments for the customers. And we can help them kind of play in the different space with programmable wallets and other things to help advance those concepts. And I think there's going to be questions around, and I think the Singapore government thinks of it as like, CBDC, tokenized deposit, stablecoins as M0, M1, M2. And we can chat a little bit about that, but I think there's space for all of it.
So stablecoins M2?
Stablecoin M2 is private money.
Right, because anyway, it's interesting.
CBDC would be M0, yeah.
Right, yeah, CBDC is M0. You guys are all monetary,
different layers.
Central banking nerds, right? M0, M1. Anyway, M2 is
so one thing
private
to your point, right? We had done past 2 years did experiments in terms of saying that if banks were to build their infrastructure, what you've been doing for like past 9 years, it would be a long process. So I did 2 experiments. One was with Paxos, one was, again, working with Circle to figure out, can we use their infrastructure? Can we use their instruments, but use our settlement systems? And that's the fastest way, I think, we realized that instead of building our own infrastructure, which requires skill, acumen, risk, which will take you 2 years to go through it, it'll be just easier to, if we had clarity, a regulatory clarity around what stablecoin is and if that can be used as a settlement instrument.
So I'm not, sorry, I think, Danny, you could weigh in, because I think the sort of underlying sort of Filecoin layer 1 take on this is important. But I was chatting to somebody from Brazil last night, and Brazil's is suddenly just leaping forward in terms of using crypto or blockchains, at least for payment systems. And they're really focused on trying to enable programmability and interoperability at that payment layer, because they make the argument, I think it's a very strong one, that if you really drive programmability into the payment model, you suddenly get all these other use cases. Fix money and fix cash, and you can do all sorts of things. So where does that stand? I mean, and how important is that element of what this development looks like?
So I think for me, one of the things that you've got these sort of 2 sides to stablecoins. Like I say, they have visibility, they have legibility. If you've ever read Seeing Like a State, and I always try and time to see how long it is before somebody mentions Seeing Like a State. But anyway, they're legible to governments as a certain artifact, and they fit very amicably into the larger financial system. But we mustn't forget that the primary purpose of stablecoins is how they interact with the rest of the Web3 system. They perform a function within that, which means that there's a lot more fluidity and a lot more capability about what happens there. And I think that's just this moment of caution, because, I mean, as you've said, like, it's taken a long time to get to this place. And one of the reasons why is you have to keep on turning up at the regulators and go, hey, you know that thing we were talking about last time? Actually, somebody's invented a new thing, and you're going to have to integrate that into the way you're thinking, right? And this was definitely, my experience. I think one of the most perceptive and thoughtful and careful regulators right now at the moment is happening in the UK. I mean, in many ways because of Brexit and because of the failings of the US system, they're trying to carve their own path. And so they've been doing this very Borgian kind of like cross-examination of what all these different kinds of digital assets are. And they like us as Filecoin because we're like, the poster boy of utility tokens. And we go in and they say, so utility tokens, you fit into this compartment. I go, actually, no, right? Because you're thinking that utility tokens won't be exchanged on an exchange or won't have a connection with stablecoins. And that's just not how Web3 works. Like all of this stuff forms different functions and different programmability, as you say. And I think not only do we have to come up with a really good framework at the beginning here, but we have to have a long-term relationship with the people who are going to be regulating this environment to keep it up to date and keep it as flexible as this ecosystem is going to continue to be.
Yeah, I mean, we've got, I think, 1 minute left. So look, 3 minutes more. Okay, so I want to round it out with just some sort of predictive elements on that. So, I mean, Nitin.
Yeah, so I would say that stablecoin bill gets passed in 2025, and I think that most banks rely upon companies like Circle and Paxos and PayPal's who have built the infrastructure, and for them to provide an on-ramp, off-ramp services to be able to consume stablecoin as settlement instrument in the long run.
Yeah.
Well, I'll do two. One is that we're in an inflection year in terms of the regulatory framework globally. The other piece, I think, for the builders in this room, we are at a really interesting year in terms of making Web3 technology more usable for Web2 firms. Things like programmable wallet, things like abstracting the gas fees to make it easy to understand. That is actually what's going to propel the uses of the blockchain for digital wallet companies, Web2 digital wallet, and e-commerce companies. And people won't think about that it's on a blockchain. Then if we can get to that state, we win.
Yeah, actually, that's an interesting pick up on that. Maybe what can the guys in this room do to?
So
work better?
at the policy workshop that you fantastically led earlier on, two of the keywords were stability and clarity, and it's the thing that our users want, and it's the thing that our communities want, and it's in the name of stablecoins. But I think this is going to lead to something like that, to have this unit that is usable and stable and comprehensible for the end user. And I think the opportunity here for the rest of us in Web3 is to take advantage of that at the moment that it really comes in and say, look, there is a world of speculation and a world of excitement that you can take advantage of here. But if you really want to use these tools in a way that separates it from that excitement, you can, and you can do that in a trusted environment.
All right. Well, on that, round of applause for this panel, please.
Thank you.